We are starting with chapter number 12, that's business combination. A very, very important chapter. So chapter 12, chapter 13, business combination and consolidated financial statement, the total weightage is around 20 marks. I repeat, chapter 12 plus chapter 13, the total weightage is around 20 marks. A very, very important chapter this is. Okay, now there's a question from Aditya sir, in which module it is. I think this is basically in your module number 2. So you have 3 parts, part 1, 2, 3. This is in your second part. Acha, by chance, if anybody doesn't have this material, let me just upload it on our Google Drive link, which was shared with you all people. It will just take a minute. It's book number 3. Sorry, not book number 2. It's book number 3. Okay, this has been uploaded. In case anybody has not received the physical material, the soft copy has been uploaded on our Google Drive link. Fine. Okay, any doubts? Anybody in yesterday's work? We finished Ind AS 1 and there were home assignment questions also which were there. I told you to do the home assignment questions on your own. Anybody having any doubts in yesterday's work? I want answers from everyone, please. Okay, thank you. Now, chapter number 12, business combination, you can just go to the index and against chapter 12 and 13, I repeat, in your index against chapter 12 and 13, you can write down the weightage is 20 marks. 12, 13 together, the weightage is around 20 marks. Now, the name of the chapter is business combination. The name of the chapter is what? Business combination. The 2 or more businesses are kind of combining together. That's basically the business combination. But we'll be learning in detail the exact meaning of business combination. Then we'll be learning under business combination who is the acquirer and who is the acquiree. So one party will be acquirer, another will be acquiree. And this standard talks about accounting in the books of acquirer only. I repeat, Ind AS 103 talks about accounting in the books of acquirer only. It doesn't talk about accounting in the books of acquiree. The acquiree, their business is being sold off. As their business is sold off, can I say they will be required to close their books of accounts? Acquiree, the business is being sold off. They'll be closing the books of account. And if you just recall your CA intermediate, we had basically steps to close the books of transferor. वहाँ पे word was transferor. यहाँ पे it will be steps to close the books of acquiree. And we were preparing a kind of realization account wala thing. All assets and liabilities were transferred to realization account. Against that assets and liabilities, we'll be getting something from that acquirer. So that will remain kind of same. This standard does not talk about accounting in the books of acquiree. This talks only accounting in the books of acquirer. Shall I move ahead? Okay, so going to first of all the definition of the word business combination. Going to the definition of the word business combination. What do we mean by the word business combination? Business combination is a transaction in which acquirer obtains control over acquiree. Okay. So business combination is a transaction in which acquirer obtains control over another business. Kiska business? Acquiree's business. So simple words, acquirer obtains control over another business. Now, how do I obtain control? How do I obtain control over another business? There are 2 options. One, I acquire all your assets and liabilities. So can I say I'm acquiring your full entity? I acquire your full entity, your assets, your liabilities, everything comes to me and you are shut down. So that is called acquisition by net assets. I'm acquiring your assets, liabilities, everything. And second option is imagine A Limited does not take over assets and liabilities of B. A Limited does not take over assets and liabilities of B, but A Limited acquires more than 50% equity share capital of B. If A Limited acquires 80% equity share capital of B, can I say A will control B Limited? Yes, no? So how can I control? The control can be obtained by acquiring the net asset. I acquire your company itself fully. I acquire your assets, liabilities, you're shut down. Second, I don't acquire your assets, liabilities, but I acquire your majority equity kind of thing. Imagine I acquired 80% of your equity shares. I hold 80% of your equity shares. Would I be able to have a control over you? Yes. And the word was acquirer obtains control. Acquirer obtains control of another business. ठीक है, तो control can be by acquiring net assets or by significant equity interest. Now, just imagine if I acquire your assets and liabilities, you're shut down. So can I say under AS, under your accounting standard, it's amalgamation. A Limited took over B Limited. We account as per AS 14. So if it is by way of acquiring net asset, that company gets shut down, it will be accounted like an amalgamation. But imagine if I acquire 80% of your equity shares. Okay, if I acquire 80% of your equity shares, can I say you become my subsidiary? Okay, if you become my subsidiary, I'll have to prepare a consolidated financial statement. AS 21 will apply. Okay, the control can be obtained by acquiring net asset or acquiring significant equity interest. If you acquire net asset, it's accounting by way of amalgamation, AS 14. If you acquire a significant equity interest, other entity becomes a subsidiary. We account it like AS 21. We have to prepare a consolidated balance sheet. But under Ind AS, both ways. Either you acquire the net asset or you acquire a significant equity interest, both are covered under the term business combination. Yeah, both are covered under the term business combination. But in case it becomes our subsidiary, in case B Limited becomes our subsidiary, we have to account it, we have to prepare a consolidated balance sheet that will be as per Ind AS 110. So both are covered under the word business combination. But if the other entity becomes your subsidiary, you have to prepare a CFS. CFS will be prepared as per Ind AS 110. Any doubts? Anybody till now? Any doubts? Anybody till now? So under your Ind AS, control acquired by both the way is covered in the definition of the word business combination. However, if it becomes our subsidiary, accounting will be done as per Ind AS 110, that is consolidated financial statements. Okay. Now, there are two elements in the definition. The definition is what? Business combination is a transaction in which acquirer obtains control over another business. Another business will be the entity. Okay, the one is basically the word we obtain control, and second is we obtain control over another business. See, if I just acquire your one of the asset, if I just acquire one or two asset of yours, that's not business combination. That's an asset acquisition. I acquired your land, I acquired your machine, that's it. I acquired only the land and machine, nothing else. Then it's not business combination. Then in that case, it becomes an asset acquisition. To be a business combination, you're getting a control over someone's business. Perfect. Okay, the two elements are there in the definition. One is you're obtaining control. Second is the acquiree has to be a business. The other party has to be a business. Fine. Now, the control might be acquired. You might obtain control in variety of ways. You might obtain control in variety of ways. One, by transferring cash and cash equivalent. You pay cash or you give some other assets. I'm giving you cash or I'm giving you my land and I'm taking over your business. Second, I incur a liability. Okay, so I took over your business right now, I'll pay you later. I took over a business right now, I'll pay you later. So now, can I say I assumed a liability? I have to pay you later. Third, I give my equity shares to you. I took over your business, I'm giving my equity shares. Either by giving cash or by incurring liability or by issuing equity interest or more than one type of consideration or without transferring consideration. Sir, ये क्या है? I get a control over someone's business without transferring consideration. Sir, ये कैसे होता है? I just write over here, covered later. Yeah, we'll have sums also on this, don't worry about it. We'll have sums also on this, so don't worry about it. It's by without transferring consideration, by contract alone. Imagine A Limited, B Limited. Both are in same line of business. A is a very well managed company. B is not good in management. Okay, the A and B both are in same line of business. A is very well managed company. B is not being managed properly. So A is making bumper profit. B is not able to make profit. Now B approaches A Limited. B approaches A Limited and tells A Limited that, sir, you manage our entire company. So B approaches A Limited and tells that, sir, you manage our entire company, we'll share profits. So now what happens is A will manage the entire B Limited. All decisions in B now A will make. All decisions in B A will make. So can I say A is getting a control over B? And did I pay anything? Did I pay anything? No. I got a control over B Limited without paying anything. I'll share half of profits. So it can be without transferring consideration also. There are examples on it which is covered late. Fine. Now going to the word business. One, there has to be a control over another business. किसको बोलेंगे business? So business is what? Business is an integrated set of activities and asset. It's an integrated set of what? Activities and asset which are capable of being conducted and managed. Activities are conducted, assets are being managed. So it's an integrated set of activities and assets which are capable of being conducted and managed for the purpose of providing goods or services to customer, or generating investment income or generating other income by ordinary activities. The word is by ordinary activities. Okay, so it's integrated set of activities and asset capable of being conducted and managed for the purpose of providing returns. For the purpose of providing either goods or services to customer or generating some investment income or generating some other income from ordinary activity. Okay, so can I say business has to be an integrated set of activities and asset. Achha, now imagine you heard the word shell company, SHELL. Anyone, what's the meaning of shell company? What is the meaning of the word shell company? Sir, shell company is a company which is on paper a company, but as such it doesn't do anything. On paper it's a company, but as such it doesn't do anything. That's called as a shell company. Shell, khokhla. It doesn't have any businesses inside. It doesn't do anything. On paper it's a company, but not doing any kind of activities, or doesn't have any assets, or doesn't have any liabilities. That are kind of shell company. On paper a company created. Okay, if I acquire a shell company, dummy company, fake company. No, it's not a fake company. It's a company created which doesn't have transaction. Yeah, so Shravani says, sir, it's no transaction wala company. Correct. So imagine I acquire a shell company. It doesn't have any transaction. It doesn't have any asset. It doesn't have any liability. Just it's on paper a company created. I acquire a shell company. Okay, if I acquire a shell company, did I acquire any business? I acquire a shell company. Did I acquire any business? No. There's no business only. And see, business combination, the definition says acquirer obtains control over another business. So on paper, A Limited acquired B Limited, but it doesn't fall under business combination. On paper, A Limited acquired B Limited, but it doesn't fall under business combination because B Limited is not a business only, it's a shell company. The acquisition of shell company, is it a business combination? No. So I told you there has to be a control getting and there has to be a business. You are getting a control over another business. Both element has to be present. Okay, so what is a business? It's an integrated set of activities and asset capable of being conducted and managed in a manner. What? In order to provide goods or services or to provide investment income or other income from your ordinary activities. Are you clear? Now, there's an application guidance given under Ind AS 103. There's an application guidance given under 103. They are telling business consists of input, processes applied to those input that have a ability to contribute to the creation of output. So can I say business will have input, it will have processes, and it has an ability to create output. Now I highlight this word, ability. Okay, so my question, is output mandatory? In a business, is output mandatory as of now? In a business, is output mandatory as of now? Okay, imagine there's a company which is trying to do some research. Okay, COVID came up, new variants of COVID are coming up. So there's a research company, they try to come up with some new vaccine, new formulas as of things. So that company has some equipments, that company has some scientists, that company has some other employees, and they're doing research. Till now, they have not been successful. But that company is going on. There are equipments, there are so many employees, 50, 100 employees are there. Now, if I take over that company, there is input. Input kya hai? Sir, the employees, etc. all are putting efforts, input. There's a process going on. They're trying to do some research, equipments being used, process hai. Today, output is not there because they have not been successful yet. But if I acquire that research company, do I get a control over someone's business? Yeah. It has an ability to create output. So there has to be an input, there has to be a process which has an ability to create output. Are you clear? So although businesses usually have outputs, but outputs are not required for integrated set of activities and asset to qualify as a business. The integrated set of activities and asset must include at minimum. What do we need minimum? To be called as a business, we need what? One, input, and we need a substantive process. So we need a minimum. What is minimum required? Input chahiye, substantive process. That together significantly contribute to the ability to create output. Did you got it? Business requires what? Integrated set of activities and asset. When do I say there's an integrated set of activities and asset? There has to be input, there has to be a substantive process which has the ability to create output. Fine. Now the word came substantive process. Check out, the word was which process? Substantive process. So chota mota process nahi, there has to be a proper process. Substantive process. When do I say the process is substantive? These are all theories, but we need to take care of it. When do I say the process is substantive? Tell me, aap batao. When do you say the process is substantive? Okay. Now, can I say in a business, output may be there as of now? Or output may not be there as of now, output may come up in future. Okay, if output is there, if output is already there, the process, when do I say it's substantive? It is critical to continue producing the output. Okay, when do I say process is substantive? It's critical to continue producing the output. Did you got it? Okay, suppose output is not there. If suppose output is not there, when I say the process is substantive, it is critical to create an output. If output is already there, the process should be critical to continue the output. If output is not there, the process should be critical to create an output. Okay, the check. To determine whether a process is substantive or not, the following are considered. Okay, if you do not have an output at acquisition date, so day one, suppose the output is not there. Output is not there, the process shall be considered substantive only if it is critical to develop or convert the input into output. It is critical to the ability to develop or convert the input into output. And now see, two words are there. And when do I say the process is substantive? Today output is not there. Okay, the process should be critical to develop or convert the input into output, and the input comprises of your organized workforce and other input. The input includes both. The input includes both organized workforce and other input. The organized workforce means your skilled people, etc. are there in your input. So I told you now, when I take over that research company, when I'm taking over that research company, they have scientists, they have other things. Can I say they are organized workforce, having skill, knowledge, experience to perform the process? Okay, so process is said to be substantive. Okay, today there is no output. Okay, today there is no output. So it will be considered a substantive process if it is critical. It is critical to develop or convert the input into outputs, and the input includes organized workforce and other inputs. Did you understood? Okay. This is if outputs are not there at acquisition date. Now suppose it has output at acquisition date. ऊपर था does not have output, यहाँ पे have output. पहला था does not have output, second is have output. Okay, if there's an output already there, so when do I say my process is substantive? If output already hai, when do I say my process is substantive? It is critical to continue producing the output. So it is critical to continue producing output, and the input includes organized workforce. It is critical to continue producing output, and the input includes the organized workforce. Now this is one thing. Or the process is a scarce process. The process कैसी है? It's a scarce process, cannot be replaced without a major cost. If a process is scarce or a process cannot be modified or cannot be replaced without a major cost, tell me, if process cannot be replaced without major cost, would you replace it? If process cannot be replaced without a significant cost or efforts, would you replace it? No. You will continue it. Then it's a substantive process. Or it significantly contributes to the ability of continuing producing output and is considered scarce or cannot be replaced without the significant cost or efforts. ठीक है? Okay. So when do I say the process is substantive? If there is already output. If output is there, so when do I say it is substantive? It is critical to continue producing output, and the input includes organized workforce. Or it is significantly contributing to the ability to continue producing output, and the process is either scarce or cannot be replaced without a significant cost or efforts. So already output hai, but ये process है ना, this is a scarce process, or this process cannot be replaced very easily, then it's a substantive process. And business includes what? Business needs a minimum. Business needs a minimum input, substantive process. Output may come up in future. Any doubts? Anybody? Any doubts? Anybody? Smiling, keep replying. And yes, every 15-20 minutes, one sip of water. Small करते जाओ, large बनता जाएगा. Thank you. Okay, the three elements of business we have. One is input, process, output. But our output is not mandatory. Output may come up in future as well. Output is not mandatory. Output may come up in future as well. Now, there's a concentration test given. I'm coming to this later. There's a concentration test given. I'm coming to this later. Today only we'll do it, but later. Okay, come down. Okay, there's a kind of a chart given to you on your page number 12.5. There's a kind of chart given to you on your page number 12.5. Okay, now just pay attention. Just pay attention. No need to write anything. It's already there with you. Pay attention. Okay, is there a acquired input and process? Can I say minimum we need input and process? Yeah, input चाहिए, substantive process चाहिए. If answer is no, go to A. Now what is A? Let's go down. So A is no substantive process, it's an asset acquisition. A is an asset acquisition, B is a business combination. Did you got it? A is not a business combination, B is a business combination. So acquired input and process. Do we have acquired input and process? No. Okay, so it's an asset acquisition. It's not business combination. But acquired input and process are there. Okay, acquired input and process are there. So whether output exists? Okay, output exists. If output exists, then now I'll see whether the process is critical for continuing producing the output. Whether the process is critical to continue producing the output, or the process is a kind of scarce, cannot be replaced. If answer is yes, it's a business combination. But if answer is no, then again it's an asset acquisition because it's not a substantive process. Actually, what definition of substantive process only is explained. Okay, if there are no output, then can I say process should be critical to produce or develop the output, and your input includes an organized workforce and some other inputs. Input include organized workforce and other input. If both are yes, then it's a business combination. Otherwise, it will be an asset acquisition. So simple. If it is not a business, agar wo business nahi hai, it's not a business combination. For a business, we need input and substantive process. If input and substantive process are not there, it's not a business. If it's not a business, it's not a business combination. It will be asset acquisition. Any doubt? Anybody with the chart? Any doubt? Anybody with the chart? Okay, thank you. Chalo, let's move ahead. Concentration test is pending. I'm coming to it. Now, scope under Ind AS 103. They are telling Ind AS 103 applies to all business combination. If it's a business combination, this applies. Okay, this standard does not apply to. This standard does not apply to formation of joint arrangement. See, under joint arrangement, you don't have a control, you get a joint control. Under joint arrangement, we don't have a control, we get a joint control. Under joint arrangement, we have joint control. We don't get a control, we get a joint control. So that's not covered. How to account for this joint arrangement, we'll learn later. Ind AS 111, 112. Yeah, the joint arrangement, Ind AS 111. And second, if you acquire an asset or a group of asset that does not constitute a business. Okay, if it doesn't constitute a business, can I say it's not covered here? This standard comes into picture when it's a business combination. Business combination is a transaction in which acquirer obtains control over another business. Okay, now come to the questions. Chalo. Now come to the questions. Question is whether the following is covered under the term business combination. I want answers from you all people. If at all you have read the question, I am yet to finish it, you know the answer, just write down. Just write down. Yes means business combination there, no means it's not a business combination. You just have to reply Y or N. Okay. Company D is a development stage entity. ठीक है? Not started generating revenue. Okay, the output is not there. Not started generating revenue. Workforce. Workforce consists research engineer who are developing a new technology. The patent is pending. ठीक है? They are developing a new technology. Negotiations to license this technology to number of customers are also going on. So we are trying to develop a new technology, and once it will be developed, we'll be selling our technology to many customers. We are already in talks with customer also. But sir, we are developing this technology. Once it will be ready, we'll give you. ठीक है? Now company D, they require some additional funding to complete the development and commence the planned commercial production. ठीक है? The value of identifiable net asset of D, the value of net assets of D is 750 million. Company A pays 600 million in exchange for 60%. So company A acquires 60% equity of company D. Okay, question. If you acquire 60% of company D, do you get a control over company D? If you acquire a 60% in company D, do you get a control over company D? Yeah. Okay, I got control over company D. Now question is whether company D is a business. You got a control over company D doesn't mean it's a business combination. You need to understand that company D has to be a business. If company D is a shell company, it's not a business. Okay, so whether company D is a business. Sir, currently they have input. Remember, research engineers are there who are developing a new technology. They are doing some process also. Output as of now is not there, but can I say output can come up in future? And they're already in talks with customer that sir will license our new technology to you. So whether company D is a business, answer is yes. Achha, one more thing. If you check out net asset, they have a net asset 750 million. Okay, they have a net asset 750 million. 750 million, we acquire 60%. 750 million, we acquire 60%. Can I say 450 million? So net asset acquired are 450 million, but how much are we paying? So 750 is the total assets. We acquire 60%, 450. Instead of 450, we pay 600. Can I say we are paying extra 150? So we are getting a net assets of 450 million. We are paying them 600 million. We are paying 150 million more. Tell me, extra payment comes when? Okay, if you acquire an asset, do you pay extra? Or if you acquire a business, you pay extra towards goodwill? When do you pay extra? If I acquire a land is worth, if I acquire a land is worth 10 CR, I'll pay 10 CR now. If land is worth 10 CR, I'll pay 10 CR. So whenever you're paying extra, that's again an indication it's a business combination. It's a business because you acquire a business, you pay extra for goodwill. Did you got it? When you acquire an individual asset, you never pay extra. You pay extra when it's a business. So again, this is an indication it's a business. ठीक है, तो over here, whether it's a business combination, answer is yes. See, the line written, although it has not yet started generating revenue, there are number of indicators that it's a sufficiently integrated set of activities and assets which are capable of being managed to provide returns to investor. ठीक है, there is an input, there is a substantive process. In addition, also, one more thing. Company A has paid a premium. You paid extra. In absence of evidence to contrary, company D is presumed to be a business. So by seeing all this fact, we feel company D is a business. Okay, next question. Question number 1B. Question number 1B. Okay, company A acquires 100% equity. Okay, you acquire 100% equity, voting right of P. You acquire 100% equity and a voting right of P, and P is a subsidiary of some property investment group. Okay. Now, company P has 3 properties. Okay, so can I say you obtained control over P Limited? You obtained control over P Limited, but we need to understand whether P Limited is a business. If P Limited is a business, it's a business combination. So you got control over P Limited, but P Limited business hai ya nahi? I need to check that. Okay, they have some 3 investment property subject to long-term lease. Okay, single tenant industrial warehouse. The properties are single tenant industrial warehouse. So I acquired P Limited. What does P Limited have? They have some 3 warehouses given on rent to a single tenant. Okay. So I acquired P Limited. What does P Limited have? 3 warehouse given on rent to one guy. ठीक है. The lease requires P Limited. Lease requires P Limited to provide some basic maintenance and security service which has been outsourced to third-party contractor. The lease requires P Limited to provide basic maintenance and security service which has been outsourced to third-party contractor. Administration of P. Okay, we are acquiring P. So P has 3 warehouses. Just P के पास क्या है? 3 warehouse which are given on rent to one party. Single tenant. And P also has to give some basic services like maintenance, security, but P doesn't do on its own. That P has outsourced to third-party contractors. Now, administration of company B is carried out by employee of its former parent. Okay, so who handles everything in P? There's an employee of parent company of P. Okay, so can I say P doesn't have any employees? So can I say P does not have any employee? They are not having any employee. The administration of P is carried out by employee of a parent on a part-time basis, and that individual will not come to the new owner. When I am acquiring P Limited, just that 3 properties are coming with the tenant. When I am acquiring P Limited, it's just that 3 properties coming with the tenant. Oh, they don't have any employee only. Employee to hai nahi. ठीक है. Now, sir, they are providing that security service, maintenance service, but they themselves are not providing it. It's outsourced to some third-party contractor. ठीक है. The administration of company P was carried out by employee of its parent company on a part-time basis, and this individual does not get transferred to the new owner. So can I say in reality, P Limited is nothing but 3 properties. So P Limited क्या है? 3 property है. No employees, nothing. And I take over basically actually 3 properties. Now see, you're taking over property is already rented and now the rent will come to you. It doesn't mean that a business is acquired. Imagine a guy has an office. There's someone having office which is a rented office and I purchase his office. A guy has an office which is given on rent and now I'm purchasing his office with the tenant. The office comes to me. Does I acquire his business? Tell me really. So if someone is already having an office which is given on rent and I am acquiring his office with the tenant coming to me. See, investment property is an asset. Investment property is an asset wherein the revenue, rent, वो linked है उसके साथ. When I acquire an investment property, there is always some output coming, the rental is coming to me. That doesn't mean that there is a business over here. वो तो उसका, can I say, characteristic है for investment property, generating rental income. Actually, when I'm acquiring P Limited, it's nothing but 3 properties acquired, nothing else. So do you think it's a business combination or an asset acquisition? What do you think? Is it a business combination or an asset acquisition? Sir, it's an asset acquisition, correct? Okay. So whether it's basically a business combination, answer is no. Answer is no. ठीक है. So see, investment property is a specific case in which earning return for investor is a defining characteristic of an asset. तो वो revenue generate कर रहा है, that's a characteristic of an asset, it's not a characteristic of business. ठीक है. तो over here, accordingly, the revenue generation and the activities that are ancillary to investment property and the tenancy agreement should be given a lower weightage. Should be given which weightage? Lower weightage in deciding whether acquire is a business or not. So don't say, sir, oh, tenants are also coming. Yeah, wo to revenue is also coming. Sir, output is also coming. Dear, for an investment property, earning rental is a characteristic of an asset, not of a business. Is a defining characteristic of the asset itself. The asset ka characteristic hai, it will earn rentals. So now, whenever that rentals coming to me doesn't mean that that businesses came to me. They don't have any employees. It's just that 3 properties I'm purchasing. So you purchase 3 properties directly, or you purchase P Limited ki equity. It's one and the same. So it is not a business combination. It's an asset acquisition. I cannot say it's a rental company. I cannot say it's a leasing company. Yeah, 3 property, 1 tenant. 3 property, 1 tenant. I cannot say I'm purchasing a leasing company. Okay, now I change the question. They have 3 properties. 3 big buildings. Okay, they have 3 property only. 3 big building, each having 100 apartments. I repeat, P Limited has 3 property. 3 big building, each having 100 apartments. Now, what is the business of B Limited? What is the business of that company P? They give this building ke apartments, 100. Can I say 300 apartments they are having? They give it on rentals. Okay, they have a team, 5, 7, 10 employees are there, who will find out the tenant, negotiate with tenant, enter into agreement with tenant, give some basic facilities. If tenant has some issue, they resolve that thing. They have total 200, 300 tenants. Okay, so imagine that company P has 3 properties, 3 big buildings, 100 apartment, 300 apartments. They have 5, 10 employees also who actively involved in finding out tenant, negotiating with them, giving property on rent, collecting rent on timely basis. So now can I say company P is a leasing company? 200 tenants are there, 10 employees are there, 3 properties, wo big, 300 apartments are there. Can I say now it's a leasing company? And now when I acquire company P, with their 200 tenants, with their 10 employees, everything coming to me, then I say it's a business combination. Do you get it? Understand the substance. Understand the substance of transaction. So this case, 3 properties, single tenant, no employee, nothing. So it's just an acquisition of 3 property. It's a asset acquisition. But a 3 big building, 300 apartments, 300 different tenants, 10, 15 employee managing everything, and now you take over everything. That's a business acquisition. Okay, the check C point. Okay, one more thing, you are providing some maintenance and security service. So maintenance, security services provided is not critical for producing the output, and that is actually outsourced to other people. It can be easily replaced. Okay, instead of this contractor, I may hire another contractor. So in view of this, it should be accounted for as a asset purchase. Now C point, you acquired 100% of company Q. Okay, you acquired 100% of company Q, and which owns 3 investment property. ठीक है. So acquired company Q. Company Q again has 3 investment property. What are that? Multi-tenant residential condominiums. This is nothing but apartments. So multi-tenant residential apartments. Subject to short-term rentals. And you're required to provide substantial maintenance and security service which is outsourced. Okay, you have to provide some substantial maintenance security service which are outsourced. Okay, they also have 5 employees. They also have 5 employees who will deal with the tenant. Finding out tenant, negotiating with them, entering into agreement with them, all that things. These employees are involved in variety of lease management tasks. Identifying tenant, selecting tenant, lease negotiation, rent review, marketing to maximize the quality of tenant and the rental incomes. Okay, so now company Q, they also have 3 properties, but these are 3 big buildings. 100 apartment, 100 apartment, 100 apartment, and there are so many tenants inside. 5 employees are there who are managing this leasing work. Yeah, 5 employees are there who are managing the leasing work. So can I say now company Q is a leasing company? And if I acquire company Q, can I say I acquired a business? So company Q is a leasing company. And here I can say I have acquired a business. The answer over here is yes. Company Q consists of revenue generating asset together with employees and activities that clearly go beyond the activities ancillary to property and the tenancy. So they are basically, company Q is considered as a business. Any doubts? B and C. Point number B also there were 3 properties. Point number C also there are 3 properties. But B mein it was single tenant, no employees, nothing. It was not regarded as a business. Here multiple tenants, employees are also there. Here it's considered as a business. Okay, question number 1D. Question number 1D. Any doubts are there? Please ask me. Pooch dala to like jingalala. Okay, question number 1D. S is a manufacturer of wide range of product. Company's payroll and accounting system is there. Now, company A agrees to acquire the trade, assets, liabilities, workforce, everything. You acquire the trade, business, assets, liabilities, workforce of company S, but does not acquire the payroll and accounting cost center. Okay, I'm acquiring everything, your assets, your liabilities, your employees, your customers, your suppliers, they are all trade. Trade ka meaning your customers, your suppliers. I'm acquiring everything except I don't want your software. Accounting software, payroll software which you're having, I don't want that. Okay, if accounting and payroll software not taken over, other all things taken over, is it a business acquired? So without that accounting and payroll software, can it still be termed as a business? Without that accounting and a payroll software, would it still be a business? Yeah. If I don't acquire your accounting software, payroll software, it's fine. I might have my own accounting, payroll software. But here I'm acquiring your customers, your suppliers, your assets, your liabilities, your workforce, everything. So this is still a business. This is still a business. So it's a business combination. So whether it's a business combination, answer is yes. The payroll and accounting cost center are not typically used to create output, and so they are not considered in assessment of whether it's an integrated set of activities and asset. So I don't have to see basically accounting, payroll software, that is fine. So without that also it's a business. Without that also it's a business. Okay. Question number 1E. Question number 1E. Okay, company A is a property development company with number of subsidiary, each hold a single development. So every project you come up will be your subsidiary. Okay. So you are a property development company, each project is a separate subsidiary. So you created building A, that's a subsidiary A. You created building B, that's a subsidiary B. You created building C, there's a subsidiary C. So every project of yours, you have a separate subsidiary. Okay. Okay, so now you're launching a new project. And can I say you'll need a new company for it? because every project of yours is a new subsidiary. And then rather than selling that property, you give equity interest to the owners. This many people do it. So there's a property being constructed. That's a separate company altogether. And then rather than selling property, we sell that equity interest in the company. Or tax ke liye, it will be more beneficial in tax. No stamp duty comes up. If you sell a property sell karoge, stamp duty will be there. But if you're selling equity shares of a company, can I say property tax will not be there? People are smart enough. After the completion of project, what do? They sell the equity investment because the applicable tax rate is lower than selling the entire property. So I construct a property, and then rather than selling a property, I'll sell, because that property itself is a separate company. I'll sell equity interest of that company. Equity shares in that company, I give it to them. Okay. Now you are starting a new project. You are planning to start a development of new retail complex. So I need a new company. Rather than incorporating new company, you acquire a shell company. Okay, rather than incorporating a new company, because for new project I need new company. So rather than incorporating new company, I take over a shell company. If I acquire a shell company, it's a business combination. Is it a business combination? No, sir. If you acquire a shell company, it doesn't have any business. If you acquire a shell company, it doesn't have any business. So as there is no business over here, it is not said to be a business combination. It is not said to be a business combination. So, sir, how do I account? You account it like a formation expense only. So whatever you paid to acquire a company, you account it like a formation expense of a company. Ind AS goes by substance. There's no asset also. So don't account like asset acquisition. We can't account like asset acquisition also. So this will be accounted as if it's a formation expense of a company. So acquisition of shell company. Shell company does not contain integrated set of activities and asset, and they do not constitute a business. Okay. So it will be accounted. It will be accounted as if you are forming a new company. So company A should account for purchase of shell company as if you are incorporating a new subsidiary. As if you are incorporating a new subsidiary, so it's like a formation expense of a company. Did you understand? Did you understand? Okay, so question number 1 is over. Going to question number 2. Keep smiling. Question number 1 is over. Going to question number 2. Okay, there's a pharmaceutical company. They're conducting in-house research and development. Company A is a pharmaceutical company conducting in-house research and development through its skilled workforce and recently obtained intellectual property right. They recently obtained a patent also over certain drug. The production plant has recently obtained regulatory approval also, but you're not yet started earning any revenue. So you have a patent also, you got a regulatory approval also, but you're not started the commercial production, and you do not have any customer also as of now. Now company B acquires company A. So company A is a pharmaceutical company, a lot of employees are there, they do research, they were successful in developing a new drug, they got a patent also. The manufacturing process also received a regulatory approval, but manufacturing is not yet started. Now if I acquire company A, is it a business combination? If I acquire company A, is it a business combination? Yeah, there are input, there is substantive process. Oh, patent hai, they have regulatory approvals, everything is there. Now just the commercial production will start, and can I say revenues will come up? Commercial production will start and the revenues will come up. So answer over here, does company A constitute a business? Answer is yes. The business requires existence of input and process, substantive process. In this case, you have skilled workforce, you have manufacturing plant, you have intellectual property right, along with strategic operational processes, they constitute the input and process. They constitute input and process. ठीक है, तो presuming that company A would be able to obtain access to customer that will purchase the output. Okay, so okay, you're not having customers today, but presuming that you will be able to come up with the customers, you will be able to have output, it is constituted or it is regarded as a business as per Ind AS 103. It is regarded as a business as per Ind AS 103. Next, question 3. Okay, modifying the above illustration. Okay, this is the same above illustration. If company A had a revenue contract as well as sales force, and you have a revenue contract and a sales force, and company B acquires all input, process other than your sales force. Okay, I acquire all your input, all your process, but I don't acquire your marketing team. I don't acquire your marketing team, sales force. Okay, would it still be a business? I don't acquire your marketing team. Other than that, I acquire everything. I don't acquire your marketing team. Other than that, I acquire everything. Is it still a business acquired? Yeah, still it's a business. You see, your marketing team, I can replace it with my marketing team. So whether it is still a business, answer will be yes. Although the sales force are not taken over, you might say there's some missing input, but it can be replaced. But it can be easily replicated or obtained from market. So the definition of business is met. The definition of business is met. Okay, coming to question number 4. Coming to question number 4. I hope you are enjoying our lectures. If you are enjoying, do recommend it to all your friends. And these are the latest lectures as per the latest ICA syllabus. Okay, now an entity acquired equipment and patent. Okay, what did you acquire? Only 2 things: equipment, patent. In exchange for 1,000 crore cash and a land. Okay, I'm acquiring equipment and patent. I'm paying you 1,000 crore cash and the land. The fair value of land is 400 crores. Fair value of land is 400 crores and the carrying amount is 100 crores. ठीक है, तो book value of land 100 crores, but उसका fair value 400 crores. So can I say indirectly, I'm paying you 1,000 crore cash and 400 crores of land. Indirectly, we are paying you 1,000 crore cash, 400 crores of land. So can I say total we are paying is 1,400 crores? Okay, 1,400 crores I paid for 2 things: equipment and patent. ठीक है? The fair value of equipment and patent. The fair value of equipment and patent are 500 crores and 1,000 crore respectively. Okay, the fair value is 1,500 crores. Okay, I acquired equipment, patent, 500 and 1,000. Can I say 1,500 crores? But I'm paying 1,400. Oh, combo discount mila. So I acquired something, has a fair value 1,500. I'm paying you only 1,400 crores. There's a kind of 100 crore ka discount. First question: is it a business acquisition? Is it a business acquisition? How the transaction should be accounted for? First, is it a business acquisition? No. No, I acquired only 2 things: equipment and patent. We acquired only equipment and patent. So is it a business combination? Answer is no. It's not a business combination. So it should be accounted as asset acquisition. It should be accounted. Srinidhi, it's not a business, na? Dear, I acquired only 2 assets of yours. Equipment liya, patent liya. That's not a business. Okay, so can I say I'm paying you 1,400 crores? I'm paying you 1,400 crores. The asset coming as a fair value 1,500. I'm paying 1,400. If you pay 1,400, can I say you have to record asset at 1,400? If I pay you 1400 crores, I'll record asset at 1400. I have to record equipment patent at 1400 crores, not 1500. How do I divide 1400? How do I divide 1400 in the ratio of their fair values? Individual fair value is 500 and 1000. Individual fair value is 500 and 1000. To do one thing, 1400 what you are paying. So equipment is equal to 1400 into 500 divided by 1500. And patent you record at 1400 into 1000 by 1500. Yes, no? So their individual fair values are 500 and 1000. Divide 1400 in that ratio. So 1400 into 500 by 1500. It's coming 466.66. And this will be coming 933.33. So you record it like this. The equipment record at 466.67. Patent you recorded at 933.33. Are you getting it? Okay, coming to the solution. It's there. It's there in your book. This standard does not apply to acquisition of asset or a group of asset that do not constitute a business. That do not constitute a group of is a business. So in the current case, the acquisition of equipment and patent does not represent acquisition of business. Okay, the cost of acquisition is determined based on the fair value of asset given. Okay, the cost of asset is determined based on fair value of asset given unless the fair value of asset acquired is more clearly evident. So what is the fair value of asset given? In the given case, the entity should record the acquisition at 1400 crores. The entity should record the acquisition at 1400 crore. It's the fair value of assets given. 1000 crore cash given, 400 crores of land given. So 1400 crores I've given. So that's basically amount paid. So equipment patent coming in should be recorded at 1400 crores, but sir, individually. So 1400 crores, the fair value of asset given, is to be allocated to the individual asset based on the relative fair value. Based on the relative fair value. So check out over here, equipment comes 467, patent comes 933. Did you got it? Equipment comes 467, patent comes 933. I just now wrote it earlier. Now let me have journal entry. Let me have the journal entry. I put a star here and at the top. Okay. Equipment account debit. Can I say 467? Patent account debit 933 to cash 1000. Okay, now what should I write? I gave cash 1000. I also gave a land. Okay, now don't write land 400. No. Land goes away from your book. Carrying amount is 100 and to profit on sale of land is 300. To profit on sale of land 300. Did you got it? So to land 100, to profit on sale of land 300. Total consideration is 1400. 1400 divided between equipment and patent. 1400 divided between equipment and patent. Any doubts? Anybody with this question? Any doubts? Anybody with this question? If you just check over here, the entity should record a gain of 300 crore for difference between the fair value of the land and the carrying amount of land. So land 100 crore is the carrying amount, 300 is profit on sale. Any doubts? Question number 4. Thank you. Now, before I go to this acquisition method, we have something pending. What did we left out? Before I go to this acquisition method, there's something pending, sir. Concentration test. Let's go back to the concentration test. Keep smiling. Let us go back to the concentration test. Page number is 4. Okay, now in order to understand whether it's a business combination or not, can I say we need to analyze whether it's a business or not? In order to understand whether it's a business combination or not, first I need to understand whether it's a business or not. Okay, to understand whether it's a business or not, I need to have an integrated set of activities and assets capable of being conducted and managed in a manner as to provide returns to the investor. And it needs minimum of input and a substantive process. When do I say process is substantive? They've written some theory. Okay, so can I say that big things are to be analyzed? Okay, so that definition needs to be analyzed. They came out with a simpler version. They came out with what? Simpler version. Now tell me one thing. Tell me one thing, simple. Just, okay. A Limited acquires B Limited. Okay, total assets, or we call it as gross assets. Gross assets of B Limited is, say for example, 1000. Gross assets of B Limited is 1000. Building or PP building of B Limited included in above. So out of your gross asset, you have a building. Imagine the building is 950. Okay, so A acquires B Limited. They have total assets which are worth 1000, but in 1000, 950 is building only. So tell me, did you really acquire a business or did you really acquire a building? Did you really acquire a business? If you're writing business, you write BS. Or did you acquire a building only? Building, you write BL. So did you acquire really a business? BS. And did we really acquire a building only? BL. क्या acquire किया? Here, both are starting with B. So don't write B. BS is business, BL is building. Okay, the Chaitanya says a building, Shravani says building, Abhilash building, Aditya building, Shravani asset. So everybody is telling, sir, it's actually a building only. See, this is called concentration test. So out of your gross asset, if substantial portion is concentrated in individual asset, so out of your gross asset, substantial portion, what is substantial? Ind AS doesn't say. These are 80% substantial, 90% substantial, that goes on your assumption. 80% substantial, 90% substantial, वो आपके assumption पे है. So out of your gross asset, if substantial portion is a single asset only, so this is actually a asset acquisition, not a business acquisition. This is actually a asset acquisition, not a business. So if substantial portion of your gross asset is concentrated in one asset, substantial portion of your gross asset is concentration in one of the asset, and now I acquire everything, so majorly I'm acquiring is one asset only. Indirectly I'm acquiring is one asset only. Other remaining things are all kind of chiller. Yeah, they're all chiller, doesn't matter. So out of 1,000, 950 is only building. So this is basically accounted as an asset acquisition. If this is there, don't try to check definition of business. If this concentration test is met, if concentration test is met, it is asset acquisition. Okay, so if concentration test is met, it is not business. तो business है ही नहीं. It is an asset acquisition. Did you understand? So rather than checking definition of business, first ये check करो whether concentration test is met or not. If concentration test is met, if significant portion of gross asset is concentrated in one asset, if substantial portion of gross asset is concentrated in one of the asset only, so when I acquire, I'm acquiring is kind of that one asset, that is to be accounted as asset acquisition. Okay, if concentration test is not met, if concentration test is not met, then it may be business. It may be business depending on whether definition is fulfilled or not. Depending on whether definition of business is fulfilled. Okay, concentration test met, it is not a business. Concentration test meet ho gaya, it is not a business only. So no need to check definition of business, it's not a business. But if concentration test is not met, if concentration test is not met, now you go and check the definition of business. If definition of business met, then you account it as a business combination. Are you getting it? So rather than checking that definition of business, pehle simple. Do a concentration test. If concentration test met, it's not a business. If concentration test not met, it may be business. Are you clear? Are you clear? Okay, it's an optional test. It's an optional test, not mandatory. If concentration test is met, it is not business. If concentration test is not met, further assessment is required. It may be a business. Okay, the concentration test is met if substantially all of the fair value of gross asset is concentrated in a single identifiable asset or a group of similar identifiable asset. So when do I say concentration test is met? If substantially, what is substantially? Not defined. What is substantially? The generally greater than 90%. Okay, not defined under Ind AS, but generally greater than 90%. Okay, so if concentration test is met, out of your gross asset, substantial fair value is allocated to a single asset only. So it's an asset acquisition, it's not a business. It's not a business, does not come under business combination. But if concentration test is not met, then you check the definition and try to see whether it's a business or not. The concentration test not met, it still may be a business. I'm not telling it is a business, it may be a business. Are you clear? Are you clear? Now, step 3 important, step 4 important. Step 3 important, step 4 important. Okay. Steps for concentration test. Okay, first you find out the gross asset. So find out the fair value of gross asset total. Now identify the single asset in that and see if substantially all of the value determined in A is concentrated in B. If substantial fair value of gross asset 1000, single asset is 950, so then it is a asset acquisition. If substantially all the fair value of gross asset is concentrated in a single asset, so it's a asset acquisition, it's not a business combination. Otherwise you have to assess whether it's a business combination or it may be a business combination if concentration test is not met. Are you clear? To find fair value of gross asset, fair value of individual asset, and try to see whether the fair value of individual asset substantially covers the fair value of gross asset. Now, how to find out the fair value of gross asset? The fair value of gross asset shall be found out as follows: A plus B minus C. Okay, it is A plus B minus C. ठीक है, अब ये क्या A plus B minus C? We have A, B, C over here. I'll come to it. Okay, now just pay attention. Okay, you already had 30%. You acquired another 30%. And can I say NCI is 40%? You already had 30%. You acquired another 30%. And NCI will be 40%. Okay. Yes, no? Okay. So you acquired 30% today at rupees, say for example, 100. Fair value of earlier 30%. Can I say that is also rupees 100? Fair value of, I make it chalo 90. This becomes simpler. And fair value of NCI, वो 40% है, 30% is 90, so can I say this becomes 120? So 30% I'm acquiring today at 90 rupee. Earlier 30% which I had, uska fair value 30% today only acquired at 90, the earlier 30% is also worth 90. And NCI 40% is worth 120. अब मुझे बताओ, whatever total comes, if I ask you whatever is the total coming, what is this? तो ये जो टोटल आ रहा है 90 plus 90, 180, 180 plus 120, 300. What is this? Can I say this is the value of 100% of their business? 30% which I acquired is worth 90 today. Earlier 30% which I am having, that is also worth 90 today. And 40% NCI is 120 today. So can I say this is nothing but the entire business ka worth? This is the entire business worth, yes, no? Okay, this represents entire business. So can I say this represents entire net assets of B? This represents worth of their entire business. That is entire net assets. So for their whole business, net assets, that is assets minus liability. For their entire business, the value is 300. Did you understood? Okay, so entire business, the net asset is worth 300. Now I want gross asset. How do I get gross asset? The entire business net asset, the entire business asset and liability all together is 300. I want gross asset. To get gross asset, we need to add back the liabilities. I want gross asset. It is asset minus liability. So liabilities, add it back. So can I say now you'll get gross asset? Did you got it? Yes, no? Okay, so check over here. Check over here. How do I get a gross asset? First, the fair value of consideration which you are transferring, including the fair value of NCI and the fair value of previous equity interest held. Okay, today I acquired 30% at 90. Earlier 30% today again has a fair value 90, and NCI 40% has a fair value 120. So 300 rupees is the fair value of the entire business. 300 rupees is the fair value of their entire business. Fine. Now, entire business, it's asset minus liability. I want gross asset. Add back the liability. So, fair value of liabilities B point you add. So, check A plus B. Did you got it? A plus B. So, A was net asset. Add back the liability. You get gross asset. A was net asset. You add back the liability. You get gross asset. Okay, the point A symbolizes net asset. Point A symbolizes net asset. To get gross asset, the liabilities are to be added back. Did you understood? Now, we got gross asset, all assets. Now, few assets they don't want you to include. Few assets they don't want you to include: cash and cash equivalent, DTA, and goodwill arising on DTL. Okay, so they don't want you to include what? Cash and cash equivalent, then DTA, deferred tax asset, and any goodwill. Goodwill which arises due to DTL. The opposite you recorded a DTL, that's why goodwill came up. Opposite you recorded a DTL, that's why goodwill came up. That. So these three things are to be deducted. Ind AS 103 specifically mentions that these items will not form part of gross asset. That's why they are deducted. So first, when I get the value of entire business, that net asset. Add back liability, it becomes gross asset. Add back liability, it becomes gross asset. But Ind AS says you don't consider cash and cash equivalent, DTA, goodwill arising from DTL. So that three things you don't consider. They say we don't consider. We'll deduct it. So that's why it is A plus B minus C. Did you got it? A plus B minus C. We have an example on it. We'll see the example. We check example and then we take a break. We check the example and then we are taking a break. Okay. Now let's see. Entity A holds 20% in B. You hold 20%. You further acquire 50% by paying 300 crores. You further acquire 50% by paying 300 crores. Fair value of assets and liabilities which are coming up: building, cash and cash equivalent, financial liability, DTL. Now, the fair value of entire company is 400 crores and NCI is 120. And previously held interest. Okay, see, you already had 20 plus you acquire 50. Can I say NCI will be 30%? You already had 20 plus you acquire 50, yours becomes 70. NCI 30. Okay, for 50% you have paid 300 crores. For 50%, 300 crores. Okay, NCI 30% they already given. NCI 30%, the fair value is 120, and your previous 20%. Previous 20% ka fair value 80. The 20% which I already have, fair value 80. 50% which I bought right now, 300 crores. and 30% NCI is 120 crores. Total of all three, can I say it's the value of entire business? So fair value of consideration transferred, including fair value of NCI and the fair value of previous equity interest. Total. Okay, you transferred currently 300. This is for 50%. Okay, this is for 30% NCI and this is for 20% already held. This is 50% acquired now. For 50% acquired now, 300 crores. For NCI 30%, it's 120 crores. And for 20% already had, uska fair value today is 80. So this 500, this 500 is actually the value of entire business, that is net asset. This is the value of their entire business, that is net asset. Now I want gross asset. I want gross asset, add back the liabilities. I want gross asset, add back the liabilities. Okay, which are the liabilities I'll be adding back? Okay, building is not a liability. Cash and cash equivalent is not a liability. Okay, financial liability. And second is DTL. Financial liability and DTL. So can I say actually this two? Add back the liabilities. Now, see, if you consider DTL as a liability, pay attention. If you consider DTL as a liability, so what will happen is, can I say net assets will go down? If I consider DTL as a liability, net asset goes down. If DTL is considered as a liability, net asset goes down. Net asset goes down, you're paying the same amount. Can I say goodwill will increase? The net asset went down. The net asset became 90, but I'm still paying 100. Net asset became 90, but I'm still paying 100. So can I say now that goodwill will come up? If you consider DTL in a liability, there will be a goodwill coming up. So DTL you consider as a liability. If you consider DTL as a liability, opposite there will be a goodwill arising due to DTL. Very simple. If DTL is in liability, net asset goes down, we are paying the same amount, opposite there will be a goodwill coming up. Okay. So if you add DTL in B point, if you consider DTL as a liability, add it in B point, so goodwill from DTL I have to deduct in C point. So B point you add 150. Can I say in C point you have to deduct 150? If I treat DTL as a liability, the goodwill from DTL they have clearly said you have to deduct. So add 150 in B point, then deduct 150 in C point. Can I say rather than that I can ignore it? So add 150 in point number B and then you deduct 150 in point number C. Ultimately it gets nullified. So what does ICAI do? They don't treat DTL as a liability in point B and they don't deduct goodwill from DTL in point C. If you consider DTL as a liability, in point B, you'll add 150 in point B, and because of that now there's a goodwill also coming up, you deduct 150 in point C. So यहाँ पे 150 added, यहाँ पे 150 deducted, ultimately it becomes 0, 0. ICAI is ignoring it. Did you got it? Okay, so if you just check, ICAI would not have added this 150, they would have directly added this 800 only. They would not have added 150, they would have added 800 only. The fair value of liability assumed is 800. Now, excluding deferred tax, I'll give a note for it. Excluding deferred tax, I'll give a note for it. I'll put a star here and I write down at top, excluding deferred tax. If DTL is treated as liability and rupees 150 is added in point B, then because of DTL, net asset goes down, but PC is same, and so goodwill arises. In this case, goodwill on DTL that is rupees 150 should be deducted in point C. So point B you add 150, point C you deduct 150. Point B you add 150, point C you deduct 150. Alternatively, DTL and goodwill on DTL both can be ignored. तो दोनों को ignore करो, adding 150, deducting 150, answer will still remain same. Did you understand? Both can be ignored in point B and C. In point B and C. Okay, so they have ignored DTL as a liability in point B. So they will ignore goodwill on DTL in point C. So point B, they have not added 150. In point C, they have not deducted 150. Did you got it? If DTL is treated as liability and rupees 150 is added in point B, then because of DTL, net asset goes down, but PC is same, so goodwill arises. In this case, goodwill on DTL 150 should be deducted in point C. So 150 add in B, 150 deduct in C, or you can ignore it. Okay, so now ICAI is ignored. In step C, they've just deducted cash and cash equivalent 200. Remember, cash and cash equivalent, DTA and goodwill on DTL. Cash and cash equivalent, DTA and goodwill on DTL are to be specifically deducted. They've deducted 200. So now gross asset. Gross asset is step 1 was 500. A was 500 plus B 800 minus C, so it is 1100. Did you got it? Did you understood gross asset? Did you understood gross asset? For 50%, what we paid right now, 30% NCI, what is the today's fair value? 20% already had what was today's fair value. So this is 100%. This is for the 100%. This is the net asset. Add back the liability, it becomes gross asset. But they specifically say it cash and cash equivalent, DTA and goodwill on DTL are to be ignored. तो उसको minus करना है. And DTL was not taken in liability, so goodwill on DTL don't deduct. If you consider DTL in liability, then you have to deduct 150 as goodwill on DTL also. So 150 added above, 150 deducted, or you ignore. ठीक है. Now, out of your 1100 crore net gross asset, out of 1100 crore gross asset, can I say building itself is 1000? Out of your 1100, one of the asset coming is building. So gross asset 11, in that a single asset 1000 building. So 11 may say 1000, so 1000 divided by 1100. Can I say it's 91% approximately? Okay, substantially all fair value of gross asset acquired is concentrated in a single identifiable asset building. It's approximately 91%. It should be accounted as an asset acquisition. it should be accounted as a asset acquisition. In our view, we have considered 91% as substantial. Substantial word is not defined in standard. The word substantially is not defined in the standard. We have considered 91% as substantial. Any doubts? Anybody with this? Concentration test. So out of your gross asset, if substantial fair value is there in single asset only, to treat it as asset acquisition, not a business combination. Out of 1000 gross asset, building itself, out of 1100 gross asset, building itself is 1000. They actually are acquiring majorly building only. So then in that case, it becomes a asset acquisition. No need to check definition of business combination, etc. So if concentration test is met, it is not a business, account it as asset acquisition. But if concentration test is not met, it may be a business. I'm not telling it is a business. It may be a business. Then you go and check the definition of business. Okay, now we take a break. Now we are taking a break. This example on concentration test, important. Actually, it's already written. Example on concentration test is important. It's actually written, but still mark it. Done. Question number 1, 2, 3, 4 is done. Question 1, 2, 3, 4 is done. Acquisition method, we start after the break. Acquisition method, we are starting after the break. It's 8 hours and 7 minutes. We meet back after 10 minutes, 8 hours, 18 minutes. It's 8 hours and 7 minutes. We're meeting back at 8 hours and 18 minutes. Enjoy your break. Okay, hi, welcome back. Give me a thumbs up if you're back. All of you fast. We understood the meaning of the word business combination. It is a transaction in which acquirer obtains control over another business. Yeah, another business is basically the acquiree's business. In order to be a business combination, there are two things required. One, you're obtaining control, and second is over another business. So unless it's a business, it cannot be a business combination. Now, if it is a business combination, how do we account? Chalo, I understand it's a business combination. A Limited obtains control over B Limited. Either we acquire assets and liabilities of B, or we acquire a significant equity interest. Yeah, we are acquiring a significant equity interest and they become our subsidiary. If they become a subsidiary, we'll be required to prepare a consolidated financial statements. Fine. If it's a business combination, how to account? Accounting will be done as per acquisition method. Okay, if you just recall, under your AS 14, you used to have two methods, pooling of interest method and purchase method. Yaad hai? You used to see whether amalgamation is in nature of merger or amalgamation is in nature of purchase. If it was amalgamation in nature of merger, we were following a pooling of interest method. And if it was amalgamation in nature of purchase, we were following a purchase method. So under AS 14, it was like that. Here, all your business combinations are accounted by acquisition method except common control business combination, CCBC, common control business combination, which I'll be covering it later. Okay, so all your business combinations are accounted. Under acquisition method. कौन सी method है? Acquisition method. Now, sir, how does acquisition method work? So key steps. So we just have some following key steps. First, we have to identify who is the acquirer. Then you identify or determine the acquisition date. Okay, so who is the acquirer? Okay, from which date he got a control? A Limited got control over B Limited from today. So consolidation will start from today. So first, identify acquirer. Second, identify the acquisition date. Then your assets and liabilities will be coming in to recognize the assets acquired, liabilities assumed, any NCI. Yeah, if you acquire 60%, still while preparing CFS, you will include 100% assets and liabilities, 40% assets and liabilities will be shown as NCI. You record all that things. And you record any goodwill or gain on bargain purchase. If you are paying more, it's a goodwill. If you are paying less, remember under your AS 14, we were calling it as capital reserve. If I pay more, I record as goodwill. If I pay less, I credit to capital reserve. Here they call it as gain on bargain purchase. So you had a bargain purchase. You paid less, assets and liabilities coming are more. So that's gain on bargain purchase. Okay, so what are the key steps? Under your acquisition method, step 1, identify acquirer. Step 2, determine the acquisition date. It's very important. Acquisition date is the date from which their assets and liabilities will be coming in our books. Yeah, the assets and liabilities will come in my books from acquisition date. Also, the assets and liabilities come in our book at acquisition date fair value. The assets and liabilities will be coming in our books at acquisition date fair value. It's very important to understand what's the acquisition date. Okay, then on the acquisition date, we'll record the fair value of assets, liabilities, NCI, etc. coming in. And now, if I paid more, it will be goodwill. If I paid less, that's a gain on bargain purchase. Did you understood? Now, today we just have to do step 1 and 2. Today we are just doing step number 1 and 2. We'll understand who is the acquirer. We'll understand acquisition date. Okay, let's start with acquirer. Okay, identifying the acquiring enterprise. Identifying who's an acquirer. The acquirer is an entity that obtains control over another entity. Acquirer is an entity which obtains what? Control over another entity. Now, the determination of control, the definition of control is not given here. Definition of control is not given here. It is as per your Ind AS 110. Under your Ind AS 110, they have defined the word control. Okay, the investor controls, as per Ind AS 110, investor controls investee if and only if all the following are present. Investor controls investee if and only if all the following are present. Now, if you just try to recall AS 11, not AS 11, AS 21, sorry, consolidated financial statement. As per AS 21, I'm not going to Ind AS right now. As per AS 21, you have a control when you directly or indirectly hold majority of voting power. Yaad hai? As per AS 21, if you hold majority voting power or you control the composition of board of directors. Do you recall? Now, I told you earlier, Ind AS are substance based. They are principle based. They are based on principles. They are not kind of a strict rules. And I had given an example earlier that sometimes with even less than 50% holding, sometimes with less than 50% holding, you are able to take decisions whichever you want. Yeah, you hold 45%, others are all small shareholders, thousands. And that other small shareholders generally don't come and attend meeting. In a meeting, shareholders holding total around 65-70% are there. Out of 65-70%, you hold 45. So meeting में those shareholders are coming, उसमें you hold 45. So can I say you are able to take decisions whichever you want even with 45%? So AS 21 says you should have a majority voting power. These people, they don't say you should have majority voting power. These people, Ind AS 110 doesn't say you should be having majority voting power. So when do I say I have a control? The investor has a control over investee if and only if all the following are present. One, you have a power over investee. What do you mean by power? Unilaterally able to take decision. Unilaterally. Alone. You don't need anyone's permission. Unilaterally able to take decisions. You have a power over investee. Second, you should have a right, you should have exposure or right to variable returns. Okay, so you should have exposure or right to variable returns from your involvement with investee. Okay, if I hold equity, can I say I have an exposure or a right over variable returns? And all should be fulfilled. And you can use your power to influence the returns. You should have a power over investee, able to take the decisions unilaterally. You should have an exposure or right over variable return, and you can use your power. If you use your power, take proper decisions, company will do well. If company will do well, can I say indirectly you will be getting more returns? If company does well, you will be able to get more returns. Acha, so this is the definition given under Ind AS 110. They have not written you should hold majority voting power. Kahin nahi likha hai. They're not telling majority voting power. They just say you should have a power over investee. Sometimes even with 45% you have a power. Sometimes with 45% you don't have a power. Imagine there are 3 shareholders. Imagine there are only 3. You hold 45, one holding 25, one holding 30. You holding 45, one holding 25, one holding 30. That other 2 shareholder can come in a meeting, vote against you. Other 2 shareholders can come in a meeting, vote against you. You may not be able to take the decisions which you want. So in this case with 45% you don't have a power. But you hold 45, others are thousands of small shareholders. They are not coming in a meeting. So then in a meeting you're able to take decisions whichever you want. So now with 45% you have a power. Details about the definition of control we'll see under Ind AS 110. Details about the definition of control we'll see under Ind AS 110. ठीक है? Okay, now control assessment has been discussed in detail in chapter of consolidated financial statements. I'm not going much into it. It's discussed in detail in chapter of consolidated financial statements. Now we are understanding who's the acquirer. I'm understanding who's the acquirer. If acquisition is through payment of cash, okay, so I acquire your assets and liabilities, I'm paying cash. So when I say acquirer will be generally the enterprise which pays cash. Acquirer will generally be the enterprise which pays cash. The acquirer is usually the entity that transfers cash or that incurs a liability. Did you understand? Okay. If acquisition is through equity instrument, I acquire your business, I'm giving my equity shares. I'm acquiring your business, I'm giving my equity share. The acquirer is an entity which issues equity share. So acquirer is usually the entity that issues equity interest. Did you got it? Highlighting word usually because it has a relevance. So when acquisition is through cash, acquirer is usually the entity which pays cash. If acquisition is through issue of equity instrument, acquirer is usually the entity which issues equity shares. So I'm getting your assets and liabilities, I'm giving my equity shares. Did you understood? Okay, now, however, there can be a case where it's a reverse acquisition. There can be a case where it's a reverse acquisition. The entity issuing the shares. I acquire your assets and liabilities, I'm issuing shares. If I'm issuing shares, normally I'm acquirer. There can be a reverse acquisition wherein the entity issuing shares will not be acquirer, it will be acquiree. ये कैसे? Actually, it's discussed later, but I'll tell you the concept. Actually, it's discussed later, but I'll just tell you the concept. No need to write, it will come up afterwards. Reverse acquisition arises when small entity acquires big entity. Small entity acquires big entity by issue of equity shares. Example: Idea Limited acquired Vodafone Limited. Idea acquired Vodafone India Limited. Now, Vodafone was a bigger entity. And Idea Limited acquired Vodafone Limited by issuing its shares to shareholders of Vodafone India Limited. Okay, now tell me one thing. Idea acquired Vodafone India and Idea gave its shares. Idea gave its shares to the shareholders of Vodafone India Limited. Now, if Vodafone India Limited is a bigger entity, can I say I have to give more number of shares to them? If Vodafone India Limited is a bigger entity, Vodafone India is a bigger entity, can I say I need to give more shares to them? Yes or no? Okay, so imagine, just example, suppose total equity shares in Idea Limited is equal to 100 crores. Now, this is actually before acquisition. Okay. Equity shares issued to shareholders of Vodafone India Limited. Total number of equity shares in Idea is 100 crores before acquisition. Now you acquired Vodafone, it's a bigger entity. It's a bigger entity, so now you gave your shares to the shareholders of Vodafone and you gave 300 crore shares to them. Okay, so now total number of equity shares in Idea after acquisition. After acquisition is 400 crore shares. So now on paper it appears Idea Limited took over Vodafone Limited. On paper it's Idea Limited took over Vodafone Limited, but now just try to understand. Idea now has 400 crore share. Out of 400 crore share, 300 crore share are with the shareholders of Vodafone. Out of your 400 crore share, 300 crore share are with the shareholders of Vodafone India Limited. So can I say indirectly, the shareholders of Vodafone India Limited hold majority in Idea now. So on paper, it's Idea taking over Vodafone India. But in reality, Vodafone India shareholder, they have majority in Idea, and can I say they will be able to have a control over Idea Limited? This is called as a reverse acquisition. On paper, it appears Idea obtained control over, Idea acquired Vodafone India. But actually, the shareholders of Vodafone India got a control over Idea. Did you got it? Okay, so on paper it appears Idea Limited acquired Vodafone India Limited, but in reality, shareholders of Vodafone India Limited got control over Idea Limited, as they hold majority, actually 75% in Idea Limited. Out of 400 crore share, 300 crore shares are with the shareholders of Vodafone India Limited. This is reverse acquisition. Did you got it? So here acquirer is not Idea. On paper, Idea acquired Vodafone. But accounting wise, acquirer is not Idea. Accounting wise, the acquirer is Vodafone India Limited acquiring Idea. The accounting will be done as if Vodafone India has acquired Idea. Did you got it? I want the answers. Yes, no. Reverse acquisition comes into picture when a smaller entity acquires a bigger entity by issue of equity shares. Smaller entity acquires a bigger entity by issuing equity shares. So Idea Limited had 100 crore shares. They took over Vodafone India, which was a bigger entity. And as it was a bigger entity, I have to give them more number of shares. I gave them 300 crore shares. And total 400 crore shares are now there. Now it appears on paper Idea took over Vodafone, but now in the combined entity, the Vodafone India shareholder will be able to have control. Actually, it's not Idea getting control over Vodafone, it's Vodafone shareholder getting a control over Idea. It's Vodafone shareholder getting a control over Idea. That's why it is a reverse acquisition. Now, Naveen has a question, sir, any particular reason why this kind of transaction happened? Dear, for this one, what happened is, Vodafone India was an unlisted company. Vodafone India was which type of company? Unlisted. To get itself listed, there are a lot of formalities. Yeah, to get itself listed, there are a lot of formalities. But if Idea takes over Vodafone, so Vodafone shareholders, can I say they got the shares of Idea? The Vodafone's shareholder, they got the shares of Idea. And indirectly, उनके पास listed company के shares आ गए. Idea was listed, Vodafone India was unlisted. Idea was listed, Vodafone India was unlisted. To get Vodafone India listed, there are a lot of formalities, a lot of approvals, this, that were required. Simple was, this is called as a backdoor listing. This is called as a backdoor listing. The smaller listed company took over a bigger unlisted company. And now the shareholders of Vodafone India, they got the shares of Idea Limited. The shareholders of Vodafone India, they had unlisted company share. Now they have a listed company share. This is called backdoor listing. Clear, Naveen? Okay. Okay, so normally acquirer is an entity which issues the share. So Idea issues shares to the shareholders of Vodafone. So normally acquirer is an entity which issues. However, there can be a case of reverse acquisition. Now, the following facts and circumstances shall be considered in identifying the acquirer. The facts and circumstances shall also be considered in identifying acquirer. So, they include which all facts? Which are the facts and circumstances which will be considered? One, the relative voting right in a combined entity. The relative voting right in a combined entity. Now imagine there is A Limited, there is B Limited, and they form AB Limited. They form AB Limited. Now in this, shareholders of A Limited, they hold 60%, and shareholders of B Limited, they hold 40%. Okay, so now see, on paper it appears AB Limited took over A and B. On paper it appears AB Limited took over A Limited, B Limited. But now tell me, can I say shareholders of A Limited will control AB? Can I say shareholders of A Limited will control AB? So can I say combined business will be controlled by shareholders of A Limited? So shareholders of A Limited will control AB because they have a majority. So combined business is now controlled by shareholders of A. So accounting is done as if A Limited took over B Limited. So accounting will not be AB took over A and B. AB तो नया company है. So accounting is not AB took over A and B. Accounting is as if A took over B. Did you got it? So acquirer will not be AB because AB may, who has a control? A. So combined business is now controlled by shareholders of A. Combined business is now controlled by shareholders of A. So indirectly, shareholders of A are controlling a combined business. So shareholders of A got a control over B. So A Limited got control over B. So check out the relative voting right in a combined entity. So acquirer is usually the combining entity whose owner as a group retain or receive the largest portion of voting right. The shareholders of A got a largest voting right that way. Second, the existence of large minority. Existence of large minority in a combined entity if nobody has a significant voting right. If no other owner or organized group of owner has a significant voting right. Okay, the acquirer is usually the combining entity whose single owner has a largest voting right. Acha, now pay attention. What is this? Okay, A Limited and A Limited, there is Mr. A holding 60%, others are holding 40%. Okay, B Limited, there is Mr. B holding 60%, others are holding again 40%. Now A and B combine. Now A and B combine, there's AB Limited. Now can I say in AB Limited, there will be Mr. A also, there will be Mr. B also, and there will be others. Okay, so Mr. A holds, say for example, 40%. Mr. B holds, say for example, 30, others hold 30. So in AB Limited, अच्छा, A में A was holding 60, others 40. B में B was holding 60, others 40. But in AB combined entity, A holds 40, B holds 30, C holds 30. Can I say nobody has a control as such? A also cannot control, B also cannot control, others are 1,000 people, so they cannot control. As such, nobody will control AB Limited. As such, nobody will control AB Limited. But now tell me, who has the largest minority? Mr. A. Who has the largest minority? Mr. A. So accounting will be done as if A Limited took over B Limited. Accounting cannot be like AB taking over A and B. Accounting cannot be like AB taking over A and B because AB is a kind of new entity only. So accounting has to be. So यहाँ पे who is having a largest minority? Mr. A. So Mr. A belongs to A Limited. So A Limited acquired B Limited. Did you got it? So one, you try to see relative voting right. Second, the largest minority. Third, who will have a control over composition of governing body? Who will have a control over composition of governing body? Who will appoint the directors? Okay, then AB Limited. In AB Limited, A appoints 6 directors, B appoints 4 directors. If in AB Limited, A appoints 6 directors, B appoints 4 directors, so can I say A has majority directors? A will be able to take decision whichever he wants. So A Limited took over B Limited. Okay, composition of senior management. CEO, CFO, they are senior management. They are not basically board of directors, one step below the board of directors. One step below this board of directors. Acquirer is usually the combining entity who dominates the management of combined entity. Okay, the terms of exchange of equity interest. Okay, now terms of exchange. Can I say acquirer will be generally paying premium? Your business is worth 100 rupees. I'm paying you 120 extra 20 towards goodwill. Acquirer is usually the combining entity that pays premium over the pre-combination fair value. Acha, and acquirer is usually the entity which is a bigger one. It is usually the entity which is a bigger one. However, there can be a reverse acquisition. So यहाँ पे everywhere if you see the word written is usually. Everywhere the word written is usually. Usually it's a bigger entity. The two entity में जो bigger होगा ना, that will be generally the acquirer. Okay, so how do I decide who is the acquirer? So in a combined entity, if A, B are combining and AB is formed, A, B are combining, AB is formed, so who has a majority in AB? Majority किसके पास है AB में? अच्छा, if nobody has majority, who has the largest minority? Okay, तो majority किसके पास है? If nobody has majority, who has the largest minority? Who controls the composition of BOD? Who controls the composition of senior management? Who controls the composition of BOD? Who controls the composition of senior management? Okay, acquirer is generally the entity who pays premium. And acquirer is generally the larger entity. Did you got it? Any doubts? Anybody? Any doubts? Anybody? Every 15 minutes, a sip of water. Keep answering. These are few things which will help you to keep your concentration. Yeah, this is seriously very, very important. You answer each and every question asked by the faculty. And don't take the small advices lightly. Yeah, the small things are the ones which help you to create big things. Come to question number 5. Come to question number 5. Veera Limited, Zira Limited. Veera and Zira, they both are in business of manufacturing and selling lubricants. The shareholders of Veera and Zira decided to join forces. Okay, so Veera and Zira agreed to join forces and a new entity called Meera comes up. New entity called Meera comes up and they issue 100 shares to Veera. They issue 100 shares to Veera's shareholder, 50 shares to Zira's shareholder in exchange for their shares. Okay, so can I say in a new entity, shareholders of Veera holds 100 share, shareholders of Zira hold 50 shares. So when I say combined entity, the shareholders of Veera will have a control. Combined entity, the shareholders of Veera, they hold 100 shares out of 150. So Veera's shareholder will control the combined entity. So indirectly, Veera took over Zira. Did you understand? Determine the acquirer. Veera took over Zira. So Veera's shareholder gets 67% share. Zira's shareholder gets 33% share in Meera. So Veera acquired Zira. Don't say Meera acquired both. On paper, Meera acquired both. On paper, Meera acquired both, but in Meera, Veera's shareholder we have a control. So combined entity, Veera's shareholder will have a control. So indirectly, Veera's shareholder got a control over Zira's business. Veera's shareholder got a control over Zira's business. Did you got it? Veera's shareholder got Zira's business. Veera Limited's shareholders got control over Zira Limited's shareholder, Zira Limited's business. Combinedly, it will be, name is Meera. Don't go by the name. Don't think Meera acquired Veera and Zira. Don't say M Limited acquired V and Z. No. The shareholders of V Limited will have a control over combined business. So shareholders of V is having a control business with combined. So V acquired Z. Okay, next one, question number 6. ABC Limited incorporated a company Super Limited to acquire 100% shares of another company, Focus. And now you're obtaining control over Focus. To fund the purchase, Super took a loan. Okay, so ABC incorporated Super to acquire 100% shares of Focus. Super acquired a loan from XYZ and the loan fund are used by Super to acquire Focus. Post acquisition, Super has an ability to elect and appoint or remove majority of the members of governing body of Focus. Okay, the Super Limited took a loan. With that money, I acquired the shares of Focus and now I can appoint directors in Focus. And also Super Limited's management is in power. Okay. Can Super Limited be identified as acquirer? Yes, no. So Super Limited took a loan. With that money, they bought the shares of Focus Limited. Super took a loan. With that money, they bought the shares of which company? Focus. And now Super Limited can appoint or remove majority of the members of board of directors, managing body. So now I am able to have a control over their board of directors, managing body. So can Super Limited be identified as acquirer? Yes, no. Okay, Srinidhi says yes, Shravani yes, Abhilash yes. Everybody is telling yes. Answer is yes. Naveen, why no? Tell me. Okay, Naveen has written no. Naveen, there's no reason why no. You are having a control over the governing body of basically this. As you have a control over governing body, you also hold 100% of equity shares of that company. You can take decision whichever you want, so you have a control. The answer is yes. Okay, but now how do we write the answer? How do we write the answer? As they are telling, acquirer is the entity that obtains control over another entity, and facts and circumstances shall be considered in identifying the acquirer. We already did this facts and circumstances. Relative voting right in combined entity, existence of largest minority, composition of governing body, composition of senior management, terms of exchange, and super limited has the ability to appoint or remove majority of members of governing body of focus and ability to dominate the management of focus. Accordingly, super limited will be identified as acquirer unless there are terms and conditions which proves contrary. Okay, Naveen is telling, sir, ABC Limited has a control over super. I understand. Overall, if question was whether ABC will have a control over focus, that also answer is yes. ABC formed super, and super acquired shares of focus. Actually, super has control over focus and ABC has control over super. ABC has control over super. The question was not whether ABC is having control over super or not, or whether ABC is having control over focus or not. Question is whether super can be identified as Aquarius. In this scenario, super limited has ability to appoint or remove majority of the members of governing body of focus and ability to dominate the management of focus. The super will be identified as acquirer unless there are conditions to conclude the contrary. Okay, important is you should have written this theory. If people don't write theory, the marks are not there. I again tell you, marks are not for conclusion. The conclusion, okay, it's important, but 1 or 2 marks is for conclusion, 3 marks. Suppose this question is of 5 marks. Suppose this question is of 5 marks. 3 to 4 marks are for theory, 1 to 2 marks are for conclusion. If you have not written theory properly, don't expect proper marks. Okay, so this was identifying acquirer. Now determining acquisition date. This was identifying the acquirer. Now we go to determining acquisition date. Last topic of the day. Last topic of the day. There's some theory and few questions. Now, determining acquisition date. Acquisition date is the date on which acquirer obtains control over acquiree. Acquisition date is the date on which acquirer obtains control over acquiree. Now tell me, generally, I'll get a control over you. Can I say when I pay you PC, purchase consideration? If I pay you PC, you will give me your assets and liabilities. I get a control over them. But generally I pay PC and I'll be getting control over your assets and liability. Sometimes you'll give me your assets and liabilities right now. I might be paying you later as per the agreement. So date on which you get control is the acquisition date. It is generally the date when you transfer the consideration. Acquire the asset, assume the liability. That is generally. So generally when I pay, you will give me assets and liabilities. I get a control over assets and liabilities. However, you may obtain control on a date which is earlier or later than the closing date. It may be based on agreement. Sometimes you gave me assets and liabilities right now. I might be required to pay you within 3 months. Okay, so can I say I got assets and liabilities? I got a control right now. I might be paying later. So generally, acquisition date is the date when you get a control, and you are getting control generally when you pay the PC. Sometimes before paying PC also you may get control, but sometimes PC is paid in advance. Okay, I paid you money right now, you will give me assets and liabilities after 3 months. I paid you money in advance. You will give me assets and liabilities after 3 months. So when that assets and liabilities come, that time the control comes. Are you getting it? So generally, it is the date when you transfer the consideration. However, it may be earlier or later than that closing date, the date when you transfer consideration. Early bhi ho sakta hai, later bhi ho sakta hai, based on agreement. Okay. If agreement is subject to approval, say you need approval of share Competition Commission of India. If business combination is subject to some approval, then acquisition date cannot be before the date of approval. Then acquisition date cannot be prior to the date of obtaining approval. So unless that approval comes, you cannot have a control. Okay, now imagine control. See, approval came. Approval came doesn't mean control came. Approval came, then you paid PC and then they gave you assets and liability. Approval came, then you paid PC and then they gave you assets and liability. So the date when you are obtaining control will be the date generally when you get a control over that assets and liability. So they're telling it cannot be a date prior to the date of approval. If business combination subject to approval, the business combination, the acquisition date will always be a date, not the date of approval. It is not prior to the date of approval. It may be the same date or it may be later. It may be same as approval date or it may be later. Did you understood? So control acquisition date can be same as approval date or later. I don't have to see approval date. I have to see when did I got control. It cannot be prior to approval date. Either it can be approval date or later. Are you clear? Okay, next, the acquisition date is very important. Why acquisition date is very important? Because see, your assets and liabilities I'll record in my book acquisition date fair value. Assets and liabilities I'll record in my book acquisition date fair value plus PC. If I'm giving you shares of my company, the acquisition date fair value of shares will be the PC. I'm giving you shares of my company. What is the fair value of this on acquisition date? So this is very important step because it determines when you should record and measure the consideration, assets and liabilities. And plus consolidation starts from this date. If I got a control on this date, the consolidated financials will be from this date. So acquisition date is the date when acquirer obtains control over acquiree, the date when you're obtaining control. Generally, it's the date when you pay PC. Generally. But it can be a date before. It can be a date before payment or it can be a date after payment also based on your agreement. If the business combination is subject to some approval, then acquisition date cannot be a date prior to the date of approval. It can be same as approval date or it can be later. I just have to see when did I got control over acquiree. Any doubts? I just have to see when did I got control over acquiree. Okay, come to question number 7. Come to question number 7. A acquired 80% interest in company B. Okay, assume company B is a business. Assume company B is a business, so you obtained control. You obtained control over another business. It's a business combination. Now, question is acquisition date. So, when did you obtain control? Okay, the date of shareholder agreement is 1st June. Appointed date as per shareholder agreement. So, from 1st April we are together. That's appointed date. So, profits from 1st April belongs to you. Date of obtaining control over board representation. The profits belong to you. Profits from 1st April 21 belongs to A Limited. Okay, so from 1st April 21, profits will belong to you. Okay, but date of obtaining control over board representation is 1st July. Date when I paid you PC is 15 July and shares. Date of transfer of shares to company A is 1st August. Tell me, which is the acquisition date? Tell me, which is the acquisition date? The shareholder entered into agreement 1st June ko, and it has been decided that from 1st April, backdate say, the profits will belong to you. You get a control over a BOD from 1st July. You have to pay on 15 July and transfer shares to company A. The B shareholders are transferring the shares to company A on 1st August. Which is the date? Okay, some people telling 1st July, some people telling 15 July. Naveen, Abhilash, Shravani says 1st July, Srinidhi, Chaitanya says 15 July. Dear, very clearly written, you got a control over board of directors from 1st July. So can I say you can take the decisions whichever you want from 1st July? You got a control over board of directors 1st July. The answer is 1st July 01. 1st July 01. Ahmed, Srinidhi, Chaitanya, are you clear? Clearly written. I got a control over your board of directors from 1st July. I can take decisions whichever I want from 1st July. Payment might be done later, doesn't matter. So, word is usually the control comes when you make payment. But can I say they've already given you control? It can be either before or after also. Okay, Ahmed, are you clear? Okay, next. 1st April. 1st April, company X agrees to acquire entire share capital of company B. And there's a binding agreement. Company X will get control on 1st April. Company X will get control on 1st April. However, the consideration to be paid only when shareholders' approval is received. Okay, it's an all equity deal. What is all equity deal? I acquire all your shares by giving my shares. I'm not giving cash. It's all equity deal. I'll take your shares, I'll give my shares. Effectively, the control comes on 1st April, but consideration will be paid. See, I have to give you my shares. I have to get my shareholders' approval. I have to give you my shares. I have to get shareholders' approval. Shareholders' meeting is scheduled on 30th April. Achha, if shareholder does not approve issue of new shares, then I'll pay you cash. If shareholder does not approve new shares, I'll give you cash. What is the acquisition date? Okay, is the acquisition date 1st April or 30th April? Is the acquisition date 1st April or 30th April? I'll get effective control on 1st April, but consideration is to be paid only when I get approval. Shareholder ka meeting is scheduled on 30th April. Okay, now here, shareholders' approval is not for approving business combination. Shareholders' approval is not for approving business combination. Reason, if shareholder don't approve issue of new shares, I'll give you cash. So business combination to pakka hai. So they are not approving business combination. They are approving whether should be paid by shares, whether should be paid by cash. You got control from 1st April only. The acquisition date is 1st April. This is because shareholders approval is not for approving business combination. Shareholders approval is for what? To decide what will be given to you. So even if shareholders don't approve, the consideration will be settled through payment of cash. So shareholders approval is not for approving business combination. Shareholders approval is not for approving business combination. Business combination is there even if they don't approve. Even if they don't approve, I'll pay cash. It is not for approving business combination. Did you got it? Acha, Naveen says that if it was for business combination, then acquisition date will be 30th April. Yes. If shareholders don't approve, business combination fail. If shareholders don't approve, then there is no business combination. Then the acquisition date cannot be before 30th April. Did you got it? Okay, question number 9. ABC Limited acquired all shares of XYZ. You acquired all shares of XYZ. Negotiation you started on 1st January. Agreement finalized on 1st March. You obtain power to control operation on 1st March. You obtain power to control operation from 1st March. But the agreement में लिखा है acquisition is effective from 1st January. Okay, so I got profits from 1st January. That is profits from 1st January belongs to ABC. See, acquisition date is not the date from which you get profit. Acquisition date is not the date from which you get profit. Acquisition date is the date when you obtain control, you are able to take decisions. Okay, so and ABC Limited is entitled to profit after that date. Okay, plus the purchase price is based on XYZ's net asset on 1st January. What is the acquisition date? Profit belonged to me from 1st January. But dear, were you able to take decisions in January, February? Profit belongs to you from 1st January. But were you able to take decisions in January, February? No. I am able to take decisions from 1st March. So over here, they've explained definition of control. They've explained definition. Acquisition date is the date on which acquirer obtains control over acquiree. And then they say the definition of control, the investor controls an investee if and only if there are all the following conditions are present: power over investee, exposure or right to variable return, and you can use your power to influence the return. Okay, so in this case, the acquisition date is 1st March. So price is based on net assets of 1st January. Profits from 1st January belong to you. You still don't have a power. Power comes when you're able to take decisions. So January, February, profit belongs to me, but I was not able to take decisions. Okay, I just put a star and we write down at top. January and February 21. Profit belongs to ABC Limited, but ABC Limited was not able to take any decisions. there was no control in January, February. The acquisition date is 1st March, from which you are getting control. Acquisition date is 1st March, from which you are getting control. Shall I move ahead? Most precious. Any student told me, sir, you advertise water so much, then Bisleri should take me in advertisement. If you have any contacts in Bisleri, do recommend my name. Okay, ABC Limited, XYZ Limited are manufacturers of rubber components. For a particular type of equipment, ABC makes a bid for XYZ's business. Okay, ABC makes a bid for XYZ's business, and CCI is telling you need their approval. Okay, so even though contracts are made subject to approval of CCI, ABC XYZ mutually decided the terms of acquisition and purchase price before they obtain the clearance of CCI. Can the acquisition date be the date on which ABC and XYZ agree the terms even though they have not got the approval of CCI? Okay, the approval of CCI is required, but we enter into the agreement, we entered into terms before the CCI approval. So can acquisition date be a date before the date of CCI approval? No. If the business combination is subject to approval, the acquisition date cannot be prior to the date of approval. The answer is no. Acquisition date is the date on which you obtain control, and normally it's when you make the payment. However, it can be earlier or it can be later also. Since CCI approval is a substantive approval, the acquisition date cannot be earlier than the date on which approval is received. Acquisition date cannot be the date earlier than the date on which the approval is received. TK, remaining you can read on your own. Come to question number 11. Come to question number 11, last question of the day. Okay, Mohan has a question. So how does it matter the date of acquisition? Is anyways financials are prepared on 31st March and we have control on that day. Isn't that enough? See dear, Mohan, if you got a control on 1st October, imagine you're getting a control on 1st October, so their assets and liabilities you'll include based on 1st October's fair value. I repeat, if you got a control on 1st October, the assets and liabilities are included at 1st October's fair value. Consolidation will start from 1st October. That's why it becomes important. I don't have to see last day ko control is there or not. Which day control came, that day's fair value, the assets and liabilities are included. From that day, the consolidation starts. Did you understand, Mohan? That's why determination of acquisition date is very, very important. From which day the control comes, that day say we include the assets and liabilities, that day say we start consolidating, that day's fair value, assets and liabilities are to be taken. Okay, now coming to question number 11, last question of the day, 9th April. 9th April, Shyam Limited started to negotiate with Ram for merger. Okay, 10th May, the board of Shyam authorized their management to go for merger? 15th May. Shyam management offered 12,000 shares. ठीक है. 31st May. The BOD of Ram accepted the offer subject to shareholders' vote. 2nd June. They made a press release about the proposed merger. 10th June, the shareholders approved the merger. Okay. 15th June, the shares were allotted to the shareholders of Ram. And what is the acquisition date and what is the PC? Okay, first, यहाँ से tell me the acquisition date. 9th April, we started to negotiate. 10th May, the BOD authorized us. Okay, you can plan for merger. We offered 12,000 shares 15th May ko. 31st May, the BOD accepted the offer subject to shareholders vote. 2nd June, we made a press release about the proposed merger. 10th June, the shareholders approval came. 15th June, the shares are allotted. Which is the acquisition date? Okay, Naveen says 10th June, Chaitanya 10th June, Shravani also 10th June. Others? Abhilash says, sir, 15th June. See, whenever your business combination is subject to approval, acquisition date cannot be a date before the date of approval. Okay, I repeat, whenever business combination is subject to approval, acquisition date cannot be the date before the date of approval. The acquisition date cannot be before 10th June. Acquisition date cannot be before 10th June. So either it can be 10th June or later. Either it can be 10th June or later. An acquisition date is a date when you get control. When you get control over acquiree's business. Okay, question. Shareholder approved on this date. Did you got control on 10th June? Okay, shareholder approved on 10th June. Acquisition date cannot be before 10th June. Shareholder approved on 10th June. Question. Did you got control on 10th June? Are they telling that now they are giving you the control on 10th June? You can have the directors appointed on 10th June. The shareholder approved on 10th June. Did you got control on 10th June? Answer is no. Question is silent. They just said shareholder approved on 10th June. Did we got control on 10th June? Question is silent. And generally control comes when you pay PC. Naveen, question silent hai. So question is silent. So generally control comes when you pay PC. When did you pay PC? When did you pay PC? 15th June. So acquisition date is 15th June. Did you got it? Acquisition date is not 10th June. Okay, shareholder approved on 10th June. It cannot be before 10th June. Either it is 10th June or later. Either it is 10th June or later. And actually acquisition date is what? Date when you got control. 10th June shareholder approved. Did we got control? 10th June shareholder approved. Did we got control? Question doesn't say that. So generally control comes when you pay PC. The 15th June will be the acquisition date. Are you clear, everyone? The 15th June is acquisition date. Your purchase consideration, you are giving 12,000 share, 12,000 share into 15th June price. See, so PC will depend on which it is the acquisition date. So 12,000 share into 90. 12,000 share into 90 will be your PC. The acquisition date will be the date on which the shares are allotted. The acquisition date is the date on which you obtain control. See, we got approval of shareholder on 10th June. It doesn't mean we got control on 10th June. Although shareholders approval was obtained on 10th June, but the shares were issued on 15th June, we would have got a control on 15th June. So PC is equal to 12,000 into 90. So this date I need to take. PC is equal to 12,000 share into 90. I put a star right down at the top. I put a star right down at the top. Okay, so over here, acquisition date cannot be prior to 10th June. That is shareholders approval date. It cannot be prior to shareholders approval date. Okay, on 10th June 22, shareholders approval came. But control came or not? Question is silent. Shareholders approval came, but control came or not? Question is silent. So generally, control comes when we pay PC. And so, acquisition date is 15th June 22. So acquisition date is 15th June 22. Okay, so what did we learn today? We learned number 1, meaning of the word business combination. Number 2, if it's a business combination, we have to follow acquisition method. Under acquisition method, we understood how to identify acquirer and how to determine acquisition date. That's it. So under acquisition method, how to identify acquirer, how to determine acquisition date. This is what we have done today. Any doubts? Anybody in today's work? Any doubts? Anybody in today's work? Again, a reminder, please make sure whatever we do in class, half an hour at home, you just go through it, revise it. I don't want you to remember anything right now, but I just want you to go through the things so that you are able to recall, you are able to have concepts better. This is not the time for remembering. Remembering will be the last 4 months, 5 months when it is there now, before your examination. That time you focus, you try to remember everything. Today it's the time to understand the things, make your concepts clear, highlight what needs to be remembered. You don't have to remember each and every line given over here, but this all highlight becomes your kind of summary. Later on, this is what you need to revise. Questions which are important, already marked as important, so later at last 2 months time, whenever you're studying, you may just go through the important question, you may not go through all the question. A few questions I may not have marked as important, but you feel were important or difficult for you, you can add that also an important thing. So currently it's a time to understand the things, make your concepts clear, highlighting what needs to be remembered at a later stage. Half an hour a day, please make sure you go home and read it. And I got a very simple definition of success. So this sentence I read somewhere and it's a very simple definition of success. It says, success is nothing but small disciplines practiced every day. Success is nothing but small disciplines practiced every day, while failure is nothing but small mistakes repeated every day. Success is nothing but small disciplines practiced every day. I attend all my classes. I make sure I go home and every day I revise half an hour. I ensure I complete my syllabus at least 5 months before the examination. I ensure I do 2 revisions. I ensure I write 2 mock tests before writing the final examination. I ensure I get all my doubts cleared on a timely basis. I ensure I give proper justice to my articleship also. I give proper justice to my studies also. These are nothing but small disciplines practiced every day. And failure is nothing but small mistakes which you repeat every day. Sir, yesterday I did not attend live and now onwards I've shifted to recorded. Okay, अब recorded में आ गया. Today I was feeling lazy, I did not watch on time. If you have decided I'll be watching everyday class evening 7:30 to 10:30 or 6:30 to 9:30 or morning 6:30 to 9:30, you should watch it with that discipline. But sir, yesterday I skipped the class, today also I skipped the class, tomorrow also I'm going to skip the class and my syllabus definitely will be extended. Sir, yesterday I didn't revise, today also I didn't revise, tomorrow also I'm not going to revise. Sir, I'm not thinking of writing any mock tests, directly I'll go and write in exams only. These are all leading to failure. It's small mistakes repeated every day. Make sure you're following the small disciplines and you're not making that small mistakes on a daily basis. See you all tomorrow. Tata, bye-bye, take care. Any doubts anybody is having, please tell me. And again, a reminder, if you like our lectures, please share it with all your friends. Our material covers everything. I'm telling you, you don't have to study anything else. All ICI questions, RTPs, suggested answers, everything is getting covered over here. The coverage in class, the material which is given to you, it's kind of the best one. Chalo.